Greetings, members, one and all of the Salivation Nation. $1,600 gold by the year's end, by December, says this bank. Let's explore. Wouldn't it be nice to be able to buy gold on a basis of $1,600 spot price? Those were the days. Well, there's one bank that sees that coming by the end of the year, by the end of December. And actually, they're not alone. We've talked about JP Morgan having some bearish predictions for gold and silver by the end of the year. But there's another bank that has made its prediction here, and they see gold prices falling. I'm talking about UBS, Investment Bank, and I'm referencing an article here from CNBC. And they see that the short-lived strength for gold expect prices to drop to $1,600 by the end of the year. And you know what that means for silver if this holds true for gold. I don't think that's going to happen. I'm pretty bullish on gold. But nonetheless, they are relying heavily on certain things, and we'll talk about it here. Gold prices have been buoyed in recent weeks as investors seek safe havens amidst fears of Russia invading Ukraine. In fact, as we speak, they are much closer to making that happen. It's pretty much imminent at this point, literally within hours. They've already made an invasion into eastern Ukraine. In the long term, UBS's investment bank's Joni Tevez predicts the recent strength in gold prices will be short-lived. She spoke to CNBC on Monday before Russian President Vladimir Putin ordered forces into two breakaway regions of eastern Ukraine after he announced the Kremlin will recognize their independence. He also says he's going to send in peacekeeping troops. Boy, isn't that something. Spot gold recently crossed the $1,900 level, last sitting at $19.08 per ounce in the morning of Asia trading hours on Tuesday. That's sharply higher than levels around $1,800 seen in early February. In fact, let's take a look and pause and see where prices are right now. They are indeed up, $19.08 for gold. Silver is up 43 cents to $24.61, more than halfway there to $25 now. Platinum has taken a pretty big spike here, and so has palladium. Palladium is now trading at crazy levels here, up $130 to $2,574. All of this is exactly because of what's going on in Ukraine. There's more talk. There has been talks of a cyber attack on Ukraine's resources there, their infrastructure and the like. So this is why the metals are moving. Look at palladium, because a lot of palladium is produced in Russia. Rhodium too. Rhodium is up to almost $20,000 an ounce again. So it is clearly, this is why it is up. The latest escalation in Ukraine raised doubts over potential for a diplomatic resolution to the ongoing crisis. U.S. President Joe Biden has since ordered sanctions on the separatist regions of Ukraine, with the European Union also vowing additional measures. Gold is traditionally seen as a safe investment during times of uncertainty. Well, it's not an investment, it's a safe hedge, a safe haven. Looking ahead, TV said the gold market is expected to revert back to focusing on macro drivers such as real interest rates, U.S. Federal Reserve policy, as well as the growth outlook. In fact, UBS sees the gold price falling to $1,600 per ounce by the end of 2022. An environment where real rates are rising and the Fed is tightening policy does provide a negative backdrop for gold, she said. We do think that this strength should ultimately be short-lived. As the end of the current quarter approaches, the Fed is widely expected to raise interest rates at its March meeting to cool inflationary pressures. And TV said that's likely to put pressure on gold. Well, it might be short-lived if it does. And by the way, and that meeting is literally weeks away now, and more than likely there will be a campaign that will be driving into Kyiv by that point, and therefore destabilizing more of the markets and the nervousness of the markets, which means that that rate hike will have little to no effect on gold and silver's price, and likely we may see supply chain issues and other problems that may see inflation continue to rise, because literally that is the beginning of war between Ukraine and Russia. Expectations for higher interest rates tend to push yields of assets such as U.S. Treasuries higher, potentially lowering the attractiveness of a non-yielding asset such as gold. But if these tensions cause uncertainty in the markets, and likely they will, I don't see that happening anytime soon, which that effectively could mean that there is some issues there, and maybe they may time it differently. I don't know. We'll see how that plays out. She acknowledged that the upside risks for gold are rising. I think the key risk here is if we start to see reallocation into gold, that the expectation that all the real rates are moving higher, they are likely to remain in negative territory, and therefore an allocation of gold remains attractive, the strategist said. Furthermore, allocation to gold could start to rebuild as investors grow more concerned about economic growth slowing down as the Fed tightens policy. Very true. In fact, I think that really there's not much the Fed can do to really stop what's already happening, in my view. Most people agree. I think they may have a short-term effect, but I think with likelihood growing even more that Russia will do a full-scale invasion, I think that's going to cause a lot more nervousness in the markets. And even as we go towards the end of the year, my guess is probably with that occurring, and especially that no one's going to stop them, Ukraine is going to be pulled into Russia, and then that will embolden not only Putin, but also China into incursions and further incursions and maybe an invasion into Taiwan, which, by the way, Taiwan is not recognized by the UN as a separate nation. Only several nations really recognize their strive for independence. They're semi-autonomous at this point, but not fully independent. And I think that China wants to bring them back into the fold. And there that is. So there's where the prices are, and we'll see. And I think that inflation will continue to put a lot of pressure on gold and silver to the end of the year, which means that I think this analyst here, UBS, is assuming that inflation is just going to go away, that it's temporary, that it's transitory, because there's only one way that you can get to $1,600 gold by the end of 2022, and that is to see inflation drop fairly dramatically. In other words, it would have to drop down to below 3%, I believe, in order for gold to hit that level. And supply chains will have to have come back into reality. I don't think any of that's going to happen by the end of the year, so I don't agree with this assessment, but I'm curious what you think is going to happen with gold by the end of the year. I've made a prediction of $1,900 gold by the end of the year, and we've already surpassed that. I may do an updated prediction for where gold is going to go by the end of the year. We'll see. But nonetheless, it's interesting to see where things are. Gold is a metal that has certainly perplexed us, and everybody wants it. And everybody wants it as a treasure, more so than as an asset class that is used as in an industry, science, and technology, although it is used in those aspects, not as much as it being treasured and held by central banks. Russia, as we know, is attempting to get more and more gold, and they have been accumulating more gold, and I think precisely because of their ambitions, and they don't want to be beholden to these sanctions. The more gold they have, the less the sanctions really have an effect on them. We'll see how it plays out. So there you have it. Let me know what your thoughts are in the comment section below. UBS is a bank, according to this analyst, that believes we're going to see gold drop to $1,600. I'd like to extend a multitude of gratitude to you all for taking the time to watch this video, and to encourage you to please rate, share, comment, and subscribe.